All right, what's going on YouTube? Just realized I was muted. But doing a recap video for today's session because turns out I ran out of storage and the actual live session from this morning didn't save because I didn't have enough storage on where I was saving it to. So with that being said, let's go over today's trades. We came into today with a very bullish bias, and let me dive into a few things here. So I am going off of, at first this morning, this level of sell side liquidity that was taken, and this is why I was initially bullish. So we're bullish because price took out these lows, and there was a daily volume imbalance here on NQ below price, and I felt as if we could get some respect there. So I was anticipating getting long from there. Dropping down to the 15-minute time frame, you guys can see that we did get some bullish reaction from that volume imbalance. And the bigger thing to keep in mind is we were still above a daily low down here on NQ, which we are still above. So looking at this daily low, this daily fair value gap, this was already traded below on ES. So we had some really nice bullish SMT that was really prominent at that point. So at that point, you got to keep in mind we're up here in price. ES is way down here below that low on the daily time frame. So dropping back down to the 15, and ultimately we'll drop this thing all the way back down to the 1 minute chart. And that first trade that I took to go long and that we took on the session was right here on the 1 minute time frame. So one of my rules, obviously, for trading is when we get those prominent liquidity sweeps, if we have prominent SMT, that's the only thing that will make it so I don't have to wait for like any market structure shifts or wait for structure or anything like that. Now sometimes it does end up coming back to bite me, and it can bite you trading that way, but usually that's enough, I have found, to justify taking a trade, as long as you still get that solid displacement and you still get a nice fair value gap entry, etc. Right? So I've noticed that if I don't take those trades, a lot of times I'll end up missing the move. It kind of just depends on the day, right? But here's what we had. So entered here, went long inside this fair value gap. Stop loss was below the low, and we were targeting the opening range high, which was first 30 minutes of market open. We were targeting that high. So it was a nice 75 point target we were running for, and we were going to go risk free at the recent high, maybe TP one time up in this structure right there. But it didn't really matter because price came down, sold off, we lost. And at that point, I was like, okay, well, where's price probably headed to? So jumping back out here to the 15-minute time frame, what I did was then I drew up this Fibonacci from this swing low to this swing high, only because I wanted to see the projections. So price was projecting the 2 to 2.5 zone down here. Now, what tricked me initially was the fact that that daily fair value gap and that daily low were still down here. I didn't expect the SMT to hold anymore. I felt like the SMT was going to fail because we were just so close. So at that point, I was open to both sides of the market because I kind of felt like this draw was just as likely. And I'm saying that just to preface the fact that I did end up taking a short. So price comes up to a 5 minute bearish fair value gap. We got the liquidity right here, right where my cursor is. I'm like, okay, I think we're going to go take this out. Last time when we lost, price came up, respected a bearish gap, and sold off. So I felt like bearishness was still going to continue, and then maybe a reversal would come during lunch or later, right? So price comes up, sweeps this. Watch this. Sweeps this. This is the 5 minute chart. So scaling in now to the 1 minute. I saw this structure right here. This order block, boom, drop down. I'm like, oh my goodness. So I don't know. I really liked that short entry. This was the short entry I took right there. And then obviously called out as well. Put the stop loss, right above the high right here, if I can put it there. So it was only a 9-point stop. So I had it just like a tick above this high, and was just, again, targeting right here. So not going for a huge trade by any means. It was light risk. It was I felt like a solid draw. We had all these stacked relative equal lows right here. I just felt like it was going to get taken out. Didn't happen, obviously. Price goes to the upside, right? I remember being frustrated because I was long biased coming into the day. And I felt like, this was a time where I flipped my bias, and I shouldn't have, and I should have just stayed with the long bias because, this would have been a very nice entry to go long from. This ended up being a 5-minute order block. As you guys can see, price breaks above, comes down, retests it, and then, ends up having a decent little move back up. So with that being said, I ended up taking another loss, but don't worry, it all made sense in the end. So I ended up taking another loss, and what I was using for entry, so get this, price comes down, hits OTE of this price leg from, I think I went off this low right here where this fair value gap, 1 minute fair value gap got respected, but you could have used this low. I mean, it really doesn't matter. They're both pretty damn close, but yeah, OTE. So check this out. Price comes down to OTE, and what happens? Boom. Market structure shifts back above this high. Fair value gaps overlapping this 1 minute order block. Relative equal highs. I'm like, oh man, this is a slam dunk. So entered here. Stop below the low of this candle. And this was going to be TP1 up here. And then we're still targeting, again, opening range high. That always was my main focus for longs, from the first long to this long. And then that got stopped out as well. Price came all the way down and swept this entire range out. Even if it was below this candle low, it would have swept the whole thing out. Doesn't matter. And then price displaces up one more time, putting in relative equal highs again. And I'm like, damn, let's jump into the 5-minute time frame. What do we see? 5-minute fair value gap. I'll be damned. So what did I do? We were off the session by this point, by the way. But everybody on the session knew I was long biased. That's pretty much what I was talking about from start to finish, minus this one short we took. And I even put in the Discord that I was looking for bullish PD arrays to form to get long from after we hit this 2 to 2.5 standard deviation anyway. So it's possible people could have caught it. It wasn't like we weren't on the session anymore, so it wasn't a call out or anything like that. But I decided to put one more trade on right here at the 5-minute gap. I put my stop loss below the low of the structure. Just because this was a huge wick. I view big, wicks like this as gaps. So I was bullish bias, had everything we needed to see in my opinion. I felt like the next draw was at the very least, I felt like we were going to come here. So what I did was entered gap, stop at the low, took on a lot of drawdown, thought I might be screwed, and was about to just turn it in for the day. And once we got up here and took really these first equal highs, I removed risk. Risk reward at this point is terrible, but at this point I'm risk free. Don't really care what happens. Here we go. Hit this buy side level. And at this point in the trade, I had made back the losses from these trades. So I just closed it fully. But obviously if I would have kept it on, we hit opening range high. So it's so funny. It's so ironic that the draw that I was shooting for the whole time does end up getting hit. So I could have actually still been profitable on the day had I held it. But I didn't. It was just such a rough morning that I just wanted to take my money back that I lost and just be done with it. And that's what I did, and that's where I'm at. So, looking at my account after a rough morning, here we go. I am still about halfway there. So I'm $100 short of 3% profit on the eval account. Price has come back to this 2.5 standard deviation from up in here. And this is going to look funny because I changed it, but looking at it like this, here's our 2.5 standard deviation of this price move. So yeah, I am at this point looking for bearishness. At least I would expect some level of bearishness, even if it's just returning back to OTE down in here. But yeah, I'm expecting bearishness from this point forward today. As long as we get a nice bearish PD array to form, and if we don't really get that, then maybe we'll just see price capitulate more to the upside, which is it is what it is, and it doesn't really matter at that point anyway. But yeah, this is the recap of the trades from today. Hopefully you guys did good. Hopefully you guys did better than this. In hindsight, I didn't need to take this many trades. It is what it is. You know, in hindsight, maybe I could have gotten short, I don't know, here in this 15-minute gap. But again, I wasn't, at that point, I really wasn't anticipating price needing to go lower. So I was willing to trade any bullish PD arrays that I saw. And the fair value gap that we took to go long initially was a 1, 2, 3, 4, 5 minute fair value gap, all of them right here. This is a 5-minute chart. So 5-minute fair value gap here. We had the bullish SMT, still have the bullish SMT. So like the bullish SMT still held, which is kind of just the frustrating part of it, you know, in hindsight. But like I said, it is what it is. Day before FOMC, obviously you got to expect chop. You got to expect some things that maybe provide you difficulty in trying to interpret where price is going to go and the next draw and all these types of things. So definitely not an easy day. I'm grateful that one, we de-risked for the losses, and I'm just happy that I was able to still capitalize on a portion of the move, because like I said, I was long biased going into the day, and that just would have been disappointing to, you know, still be right and then end up being down, you know, on the day. That'd not be fun. So that's that, guys. Hope you guys did well today. And I'm not trading tomorrow morning for FOMC day. I'm not trading until probably 30 to 60 minutes after the news release. And I'm only going to take something if there's just like a really clear, easy, nice setup. But it also is very likely and possible that I won't take a trade at all. So just stay tuned. If I post something, I'll let you guys know. And if I don't post anything, that probably just means that I didn't take anything. So with that being said, have a great day, guys. Be safe tomorrow. Don't trade FOMC day. Be smart. And I will talk to you guys later. Peace out.